morning, traders. Welcome to the TMT stock market strategy video for Wednesday, February 8th. All right, so we have new highs in the NASDAQ. Markets are rallying hard in the pre-market, that is, and then we open up. We go sideways till about 12. We have one little blip lower, and we go sideways the rest of the day. And the song remains the same. It's unbelievable. However, we do see that things are starting to change. We know that. We see that in our videos that we put out for you guys. This is what I wanted to show you guys. And I said, don't be skewed with what the daily chart is actually showing you. Sometimes, and I'll show you the spiders when we get to it, but you have a move up. In case in point, let me just get that chart out for you. And here's the 5-minute spiders. I just want to clean price and a 15-minute opening range. As you know, it's one of the things here at TMT that we follow for new order flow, new money coming into the market. Real quick, we break out. That means we have more orders and more money coming in to the upside. If we break down, we have order flow coming to the downside, meaning selling and short selling that's coming in. All right, real quick. Today we had nothing going on, right? We gapped up from the previous day. You can see here, this is in the after hours 2 days ago, but we gapped up. That was about six, almost 7 handles in the ES, and sure enough, we just gyrated all day. And for those of you who did not recognize that we had an inside morning, if you will, you lost money. And then sure enough, the market broke down one time without any pullback, and that's usually the case here a lot. Markets come down without giving a pullback. We get the pullback, but what this does just creates a bear flag for another move for a test here, and then another quick little bull flag, and then the day was over already. So not much to really write home about if you're indexing, right? So that's what I wanted to show you. But now on the daily chart, you're going to see spiders edged up and ticked up again, meaning the S&P 500, and everybody else says, wow, the market looks great. It really doesn't, because we've sold off pretty much everything that we gained in the morning, and we sold off on. So this is what a topping process looks like. I just wanted to point that out to you guys, okay? All right, now let's get to some of the other charts. And here is the dollar. Dollar finally got above the uptrend line. We remember we were down here. We got back above it. Now we just need to get above the 50-day moving average. And if we start to move up higher, and then we can flag into this 26.15, hold, and then move higher yet again, then I think that you're on its next leg of a move higher in the UUP, which of course will affect commodities. One thing that was interesting today that really pointed out to me was crude oil and of course interest rates, which I'm going to get into next. You guys all know that I'm a big fan of seasonality, and of course what is the commitment to trade reports. Again, guys, please don't take it as a timing tool. It is not. And I'm just going to go over this real quick. When you get here in the beginning of the year, of last year, when the trend is early, like you can see here, the speculators it's actually okay to follow, because the producers are always short, right? But when you get to a point where you have extremes, the producers are always right, okay? And it's not a timing tool. Now the producers are the most heavily shorted crude oil since all of 2016, okay? And I said a couple weeks back, crude is going to make a nice little move lower. Look for your XLEs, your XOPs, and your OIHs if you are indexed, and if not, dial down into the top 5 holdings of all of those 3 ETFs that I explained to you, and you'll be rewarded. And sure enough, some the headlines were today about the border tax not going through, and what happened. The speculators, mind you, in the report are hedge funds, by the way. They are the dumb money, if you will, in the report only, okay? The producers are the actual guys taking the oil out of the ground, the gold out of the ground, and they need to hedge their inventory, okay? So you have WTI, and I showed this to you yesterday, that we had an ascending triangle, and if anything, if this should hold, should test the lower end of the range, which coincides nicely with the 50-day, and then move higher yet again. So it is in the test phase now, okay? I don't like the fact that we are have rolled over in our MACD, our slow stochastics, and our PMO, which is a price movement oscillator. Okay, very reliable. But again, this is not. These indicators are just that, indicators. All right, price is what pays us. That's the main thing. All right. So now we're testing this little small ascending triangle. If we lose this on a closing basis, 2 closes below, we'll be looking for the 200-day moving average. Okay, but I do like the setups in the OIHs, the XLEs, and of course the XOP. All right, here is now interest rates. Here's the bonds. Same situation. Bonds every week have increased in shorts. Now we did have the highest short here about a month ago, but now we're back into building a long position in the producers. The producers are building long positions in TLT, which is the bonds, right? The ETF. So that tells me for a day trade, if you want to look to short it, but if you guys are looking to put, and I've got many emails that you guys position yourselves a lot, which is great, and that's why I try to cover a little bit of everything for you guys here. You could see that the COT report is showing that the markets are actually, well, in the USB, that commitment of traders, that the producers are looking to get long, or actually getting long, thinking that interest rates are moving low. And here is the 10-year, okay? You see that we have that head and shoulders look to it anyway, and here's your neckline. So if anything, we get back to the 38% retracement, which will definitely push TLT much higher, and you can see that here. I like the way I like the price action today in this thing. I really do like it. I was watching it closely. Here's that 50. We got to get above that, but if we could take out these two swing highs, you know, call it 123 and a quarter, and then we get a little bit of a back test, I think you really get the chance to fill that gap that we were talking about here, you know, from back in November. I really do suspect that we will fill that gap, and I've been talking about this for quite some time. Gaps usually always get filled. Doesn't have to be exact day, exact time, but they do get filled. GDX, inverted head and shoulders playing out. We did get the 2 closes below it. Now what we need to do is take out this local swing high of 25.56, and then we're off to the races. Okay, but I do suspect that it would probably get a little bit of a pullback. Inside day for the GLD, but you see what I'm saying, that we are moving higher here. Okay, spiders, we have a small little bearish rising wedge within a big larger in content, and we had a little bit of a blip, and this is what I was showing you. We're still basically holding the little gap up from 3 days ago, so it didn't show you anything other than a little red candle. But getting back to this, right, this is not good, right? This is horrible. We actually were up almost 7 handles in the ES, and we gave it all back. And the spiders, 229.61, we ended up on the close at 228.80. Okay, not that it's anything really ugly, but it is what it is. The markets did roll over, and that's not healthy. Okay, so that's something that I want you guys to pay attention to. Double top, we had that island top formation. Well, we got another one again. I'm just going to call this a double top, guys. I'm not going to really, I took that away. We did have it. If we were to break down the lower end of this little 226.46, I think we see lower prices. Right now, we're just holding in here again. And you can see 1, 2, 3 trading days, lower. 1, 2, 3 trading days. Let's see if symmetry holds, and we go lower again to the bottom end of this range. And then, of course, we would reevaluate. IWM, definitely, no question, the weakest of the 5 indices that we follow. We have a nice little downtrend line forming with that a bull flag look. And let's see if it can muster up a little bit of movement. Transport's really not doing too much. They were down today. That is also market divergence. We have negative divergence within the different indices. And then last is going to be the Qs, which actually made new all-time highs today. And again, this uptrend channel is holding true. We tagged it literally to the penny. Okay? Technical analysis does work, guys. All right, have a great day. Enjoy the day. Be profitable, and we'll see you tomorrow, guys.